right, so what is going on, everybody? I hope you have all been well. I mean, I haven't made a video in a while, but I'm glad to, get back and just recap scenarios like I've always had. But the main thing I want to talk about, specifically, this recap is that 3960 level, right? This order flow level that was just such a strong catalyst coming into, at least Friday, right? We were opening right at the level, and then the market just completely exploded back up into, over the 4,000s, which was a very nice movement, right? So I'm going to recap. The first thing I'm going to do is talk about just ES and gold and how the week went, right? And why, gold is fucking going ham to the upside, and why ES is also moving up. And then I'm also going to talk about just any outlooks going forward, especially into this week. We have a very interesting week. PPI release. We have the Bank of England is releasing the CPI. We also have the World Economic Forum kicking off. We have ECB President Lagarde talking Thursday and Friday. So it's going to be a very interesting week. So I really want to break this down. And then we're going to end it with just a quick intro into like the Gold Academy that I will be dropping at the in February now coming up, and just some things that I'm going to talk about, and I'm going to cover that towards the end with the gold recap and the outlook on gold, so we can all pretty much just be on that path, right, in the path of gold. So for now, we're going to just talk about ES and all this movement that we had, right? So coming into the new year, right, everybody expected this scenario to play out, the scenario of this bear flag, right, this scenario that we had here, that played out, right? We had that bear flag break, we saw price come down, then we had a little accumulation phase, as you can see, right? And then this is what left people speechless, right? Because this movement was happening towards the end of the month. Everybody assumed, okay, whatever, we're going to break down, and price is just going to continue building down after we break out of the zone. And then we actually did the opposite, right? So it's like if we're just in a little like impulsive upside move, and this is all going to decide what's going to happen, right? If this is going to come here and reject, and then we're going to just continue down, or we are going to start just breaking up and building bigger resistances that we have along the way, right? All these resistances here. So we're going to basically see if that's going to be the play to continue higher. Looking at all of this, right? The way that we have all been trading up, I tell my students this thing, right? Currencies are different than obviously stock index and futures, right? Currencies move off fundamental news, fundamental events, same thing every month, right? But ES, right? ES has a fundamental event every I would say 3 months that dictates a small glimpse of its moves, right? So once we see ES just starting to build up, and then we're leading into the earnings season, we can assume that what they are after is just nobody wants to, if they do sell, nobody wants to sell short, at the bottom. And then if anybody does buy, they want to buy at a level that can possibly be a shift in the overall trend, right? So the fact that we're leading into this, right, and on ES, it's normal. Like as soon as this broke, look, I sat down and I said, you know what? This is going to be interesting with this pin bar that formed here, right? Everybody saw this pin bar that formed, and everybody said, me specifically, I'm like, damn, that's going to be a beautiful leg down, right? This beautiful inverse pin bar is going to trap everybody at this area, right? And look at that. We ended up building back up. So anybody that got trapped, they're safe, right? For the time being, forever, who knows? But all I can tell you is that they trapped and they won that battle, right? So looking at ES, we want to talk about what was it that dictated that sentiment move, right, on Friday, that 3960. So when we look at this TPO chart, and this is only right now with volume profile, you can see that this structure here, that 3960, was a big interesting level, right? You can see by the size of these bars, right, and how much orders, what a key level that was. There was a lot of interest there, right? So all of these movements right here, you can see that we drove down, and the fact that we didn't open below 3960, right, the fact that we were opening already above showed me, right, that we were going to continue up. That was one of the things I said, if we're going to open below that 3960, 3955, yeah, we're going to wash all the way to that 3930 level where we had all these little thin order blocks, right, that we were just going to build down until we got into the zone, right? Well, once we start trading into these other structures here. So the fact that we actually just stayed above and decided to continue building up shows you that, this was just all liquidity. Everybody here became liquidity. And here we are now. My main scenario, I would say, going forward, right, it's gonna be this for this 3990 to 4000 level, right? So if we're looking at this zone, how it is right here, you can see that there's a fat interest in this area, right? So this area is gonna be our continuating level for continuating higher. We're gonna possibly want to either come down and hold or just go, right? We don't want to retest that level and just put in new structures. But any dip buys, any scenarios where we trade 4,000 to 3990 zone that starts holding, that we start seeing just sellers, right, step out of the way, we start seeing move price start stepping up, we're gonna possibly get, you know, that 40-50 key level that everybody's been, I would say, screaming for a minute, but we're gonna possibly trade into that 40-50, which I would love to see that, but again, we need something to dictate this. So what could be the move into this, right? The move can be, I would say, just bad PPI data can possibly give this movement here, right? We can get anything in regards, anything that would overpower the dollar in terms of and send the market down, right? If you have not noticed, the market pretty much trends opposite to the dollar, right? Doesn't trade part and part. So anything that would strengthen the currency is pretty much something that would take the market down. So if we see a news like that and we see price trade into that 4,039.90 area, my tip would be if we trade into it pre-market, but then we open above that area and we show interest of not wanting to go down. This can happen the first 5 minutes, whatever, you know, it really can happen. Because in this case on Friday, we saw it the first 5 minutes, right? You can see right here, you can see right at the bell how price declined to continue. So if we get a scenario like this where we are, you know, leading into an open right at that 4,039.90 level, and by some chance, you know, we are opening above and we're getting these little like wicks forming right after 9:30, I would really suggest, you know, turn off that little fucking bearish mentality and just trade what the chart is trying to tell you. I get that you may think that, you know, your little lines and your little resistance and everything can be obviously, you know, the deciding factor towards everything, but we all know that that's just what you want to tell yourself. But you know deep down that order flow is what dictates everything. Order flow is literally what gives the level strength. We can have a support and resistance line here, here, here. But if we have one, and we have a zone from 3990 to 4,000, the fact that there is so much volume at these levels, I can assume that that level is an important key level, right? Lines are just lines till they have an importance. Don't forget that. That is the key part about this, right? The reason why TPO and why, you know, volume profile is so important is because they tell us the strength of the key level, nothing else. The volume that you see down here, please, oh my God, I see so many fucking people think the volume that you see down here, ladies and gentlemen, is the volume of the candle. That's the key level. I hope everybody understands this because I'm tired of seeing people talk shit on Twitter, and then I just don't want to be, you know, that conflicting guy and just go off on people randomly. So please, you know, for the sake of me scrolling through my timeline, I would like to read educational things, not people just guessing things. So if I could recap this, it would be always remember that a key level needs to have reasoning behind it. And your touches, your lines, your this, your that, they can be important. Your wicks, everything can be important, guys. But this, learning this, gives us a whole new understanding of it, right? And with that being said, I hope that you guys either show an interest in volume profile or at least decide to look into it, because I promise you it will be worth your while. I cannot like say that enough. It will be worth your while if you learn this. So with a quick recap into the end, at least for the ES section, any scenarios that we continue building or opening above 4,000 and 39.90, I will remain my bullish bias, right? If not, then I can assume that we're going to go retest at 39.60, and then we're going to possibly want to, you know, drive into that 39.30, 20 area, which I want to see a catalyst drive this down. I don't want this to just be just little flimsy like earnings selling, because I'm going to assume that it's going to get bought up, right? So another advice that I can give, focus on the guidance of all these companies, especially if you like are a long-term bag holder. I'm sorry to say, but if you own Tesla over $150 and you're still holding, you are a bag holder investor. It's like people that went and bought a Tesla last week, and then right now the price of Teslas is what, down like 10 grand. What are you gonna do? You're gonna buy another one to fucking average down on your fucking position? Like, what is that, bro? Like, sometimes it's okay to let go of the bag and then decide if it's okay holding, right, or investing again, right? But holding it just without any like idea, like, oh my God, Elon Musk, we're gonna go back up. Like, bro, why do people do that, right? So I hope you guys understand at least the scenario why 3960 held, why we continued up, and why we are possibly building into a continuation up, or we're just gonna head back down, right? It's always a two-way street, right? Here's the thing: people want to be, I would say, they want to be like that guy that says, "Oh my God, we're gonna trade fucking like 4,000 and that's it," right? Everybody wants to be right the first time. But here's the thing: being biased doesn't help anybody, especially if you have a group of people that trade with you, right? If I were to go every morning and I were to tell my students, "Hey guys, I think we're gonna sell off," and we build, what example am I giving? I'm being biased. I'm telling them, what not to be. I'm just being it. So I tell them, look, if we open above this level, there's a good chance that we're going to go retest this area. This is what I said Friday. If we open above 3960, we're going to go retest, right? That 4,020, 4,030 zone. If we open above the fucking level, we're going to go retest. Nothing else. I didn't say anything else. But guys, if we open below, we're going to drop 30 points. I literally fucking said it like this. I give them two scenarios. Two motherfucking scenarios. All they had to do was either go long at the level hold or go short at the level breakdown and confirmation. That's it, right? So please, if you have people that listen to you, don't be biased. Don't be feeding these people a bias that could be wrong, right? Because even if it's 50%, it's still wrong. Nothing is 100% accurate. I can't just wake up and say, oh, the market's going to just explode back up. Like, no, I'm not that type of person that I'm going to go off a bias, right? So the main thing that I want you guys to learn from this is that always have two scenarios, the upside and the downside, right? There's always going to be a key level that invalidates your ideas. There's always going to be a key level that invalidates anything, right? And then if you're trading in between your two zones, right, your zone that you would go long and your zone that you would go short, and nothing's happening, we're chopping. You shouldn't be trading. You should be out with your family or doing something else, not sitting in front of your computer looking for a fucking trade when we are doing this. Up and down, up and down. What's wrong with you, bro? Come on. All right, so let's move on to the gold part of the recap, because this is the most craziest fucking structure of life. Look at this, guys. Let's look at the 4 hour first of all, right? Look at that 4 hour. Amazing bullish structure. No matter where you look at it, right? Price build and held, right? It's a scenario that we are heading to, right? We just keep building and holding, right? So with all of these scenarios playing out, we just keep building, right? What would shift this down, right? It's not going to be breaking this, right? Because if we break this and we trade this, we could just do this, right? We could just do this. Because I feel like a lot of people forget this, right? We can just do all of that. But what is going to give us the move down? Obviously, it's going to be something that indicates the X, Y strength, right? That's a fucking plus, it's not even an X. So something that indicates that strength in the US dollar, that would be the reason for gold to possibly continue lower, right? If we don't get that scenario, we are going to just, any bad news, trade down and continue buying up, right? It's what I told my students. I told them, guys, look, gold is in a bullish structure. Unless the fucking CPI report is 6.8 and 7, I am going to buy the dip. And that is what we had. Look, this was a CPI release, man. Right there, right? Look, price drove into our bullish structure, exactly as I told him, and continued higher, right? No reason for us to have been short. Price came down, came up. If we didn't trade right at that opening of price, all we had to do was wait for the build up. That's all that it was. And this is the part that makes trading gold easy, right? When we have a structure. When we had our bearish structure, guys, right? We were just selling off like no tomorrow. Look, same thing, right? You don't have to be a rocket science to understand how to trade gold, right? Like we're just building down, right? Price, price, price. Guess what, right? That's the opposite of this. So if we're going down, we're building down because the sentiment is down, and we're building up. The sentiment is up. There is nothing dictating fucking strength of the dollar. Nothing. I have not seen it. Nothing. The Fed's stupid ass goal of getting inflation down is working. That's it. Right? Why are you sitting there fucking averaging into your puts still, my guy? What is wrong with you? Take it easy. We will get the trade, but at the moment, the structure is up, right? Gold is up. Why do you have to short every move down? Why? Why do you have to be liquidity? I will never understand why these guys are liquidity, but you know what? Maybe that's what we need because that provides awesome trading for us. So gold will continue to be like this. So there's any fucking scenarios that dictate all of this down, that dictates that the Fed is going to have to continue this, whatever. Everybody's already aware that in February we're getting a 0.25. Bro, if we get a 0.75 in February, I am going to just stop trading because we're not going to get it, right? The scenarios are this. Everything is pointing to this. The Fed's goal is working. So any bad PPI release will just give me liquidity to continue my trend, right? Till we get a fundamental catalyst that will dictate this down, we're going to continue trading up, right? And then here's the thing. We're going to go look at our monthly now. Look at our monthly on gold, right? Not even that. Let's look at our weekly. Look at it, right? This is our last scenario. Technically, that I would say, we should possibly like stop, right? We should just reject here and just start going down, right? This area here. This would be, right? If we get any downside move, this could be this, right? Assuming, right? Because that's what we do. We plan. So if we get a scenario, this could be a scenario where price starts building back down. But if we trade into that 1820, 1830 level, we're just going to explode back up. You guys get what I mean? Or we get here and then just possibly get the breakdown. But something needs to dictate this, not just little support and resistance lines. Fundamental catalysts need to dictate the movement of the dollar up to dictate gold down. That's as simple as it gets, guys. It doesn't get more complicated than this. But you know what? They're going to try to overcomplicate it for you because they don't want you to know that it's this simple to trade gold. They don't want you to know that it's this simple to trade, right? They don't want you to know because they rather sell you a fucking stupid ass course, right? For like fucking $4,000 and then sit there and tell you US 30 is a pair. Patience. So what am I going to do with my Gold Academy, right? The first thing I'm not going to do is charge people fucking $4,000 for a course. I'm not going to charge them either fucking $600 for a course. It's going to be the same price as the US 30 workshops. So these are going to be multiple workshops that I'm going to do, right? But they're all going to be broken into one academy, right? Obviously, if you have a mentorship with me or you are one of my students, you're going to have access to all of this at no extra cost. If you are not, then you will have to buy each module, right? So the modules, the first one that I'm going to be dropping in February is going to be a straight gold academy, right? It's how to trade gold. I'm going to break down everything from all of these things, right? This little support and resistance, that is the easiest part of it, to the most complicated part that people don't know because they don't read, which is the fundamental part. That's what it's going to, dictate everything, how I traded, technical analysis of it, because gold, in my opinion, should be traded like this, right? With not a single indicator. But you're going to go add an indicator because so-and-so told you to because you paid him $4,000. But that is not how, because the indicator that's lagging like 80 years ago, it's not going to tell you what the Fed is going to do tomorrow. That's the key that people don't realize. You know what's the best real-time indicator? Fundamental news. So with this being said, guys, I really hope that you have all just decided to continue trading this year. Those of you that are, still new, from last year, and this is like you're going into your second year trading, bro, it's like, stop fucking crying, bro. Like, what do you think? You're gonna just fucking figure this shit out in like 2-3 months? No, bro. If it was that easy, we would all be fucking like rich already, bro. But it's not. That's not how it is, right? It's a learning curve. Every day you learn something. I'm learning every day, guys. This is the part that you gotta remember. Every day I learn. I dedicated, I would say, the whole last year to perfecting things like, my TPO knowledge, right? My volume profile and all of that. And all of that worked, right? So I'm putting it to use. This is the part that you have to remember. You're always going to be learning. You're always going to be trying to better your edge, right? What you don't have to do is get all your hard work in a paper and then do this because some idiot told you to, and then the idiot says, here, use this. You don't have to do that. What you do is you get your strategy, right? And then you get the idiot strategy, right? And then you see if the idiot strategy adds on to yours. You don't have to scrape what you know. Then why would you do that, right? There's some people that are taught wrong. That's a whole different scenario. But if you have a basic understanding, but you're just missing something, don't scrape your idea because some fucking furu with a Lamborghini told you to, bro. And that's not how it is, you don't need to scrape your ideas. This guy is not better than you, right? I'm not better than you. We have the same 24 hours. I tell this to everybody, right? I'm not better than anybody here that's watching my video. Never will be, right? I just decided to work hard towards what I wanted to, right? But I'm pretty sure that if you put the same willpower that you do into not doing shit into doing something, and you will probably be something out of yourself, right? Again, same 24 hours, nothing else. All right, guys? So take care. I wish you all a very great week, trading week. I will be back at the end of the week with another recap. If it's a good week, if it's a shitty week, there's no recap, right? Remember that. If you saw a good week, Manny's going to drop a recap. If it's a shitty week, why would I make a recap of a shitty week? For content? I don't need fucking content. I do this because I want to do this, not because I'm trying to build a following. I like to do this, all right? So take care, guys. Wish you all nothing but the best. See you all whenever the market does something.